Hey and welcome back to my channel. Today we are taking a closer look at the world of Dow Jones trading with 20 game-changing strategies that could make or break your future in 2025. My name is Pablo, and if you like this type of content, don't forget to like and subscribe. Okay, let's do this. First up, let's talk about using the 50-day moving average as your market compass. This simple yet powerful tool can guide your trading decisions like a pro. Always aim to buy when the price is above the 50-day MA and avoid trades below it. To boost your accuracy, confirm your moves with the RSI indicator. Keep an eye out for crossovers as they can signal a potential market recovery. And don't forget to watch the slope of the MA. It's a great indicator of trend strength. Next, we've got a strategy to catch volume surges before big moves explode. This is where the real money is made, folks. Look for sudden spikes in volume using tools like Bookmap or heat maps. Combine this volume data with price action for solid confirmation. Watch for pre-breakout build-up and always confirm with RSI or MACD for extra assurance. Now let's tackle a common pitfall, RSI traps. These can wreck your profits if you're not careful. Always be on the lookout for RSI divergence. A good rule of thumb is to sell when RSI crosses above 70 and buy when it eases below 30 and rising. But don't rely on RSI alone. Confirm with volume trends and pair it with MACD for better accuracy. Speaking of MACD, it's a fantastic tool for spotting what smart money is trying to hide. Signals often occur when the MACD crosses above the signal line. Always confirm these signals with volume surges. MACD is great for spotting early reversals, but be wary of flat MACD lines. They often indicate a lack of momentum. For a deeper view of market flow, consider using footprint charts. Let's shift gears and talk about a rule that can save portfolios the 2-to-1 reward to risk ratio. This simple rule can be a game changer for your trading success. Here's a strategy the pros use, following the big dogs. Top Dow stocks often rule the market, so keep a close eye on heavyweights like Apple, Microsoft, and Goldman Sachs. Always plan your trades with this ratio in mind. Risk $1 to potentially make $2. Set clear stop loss and take profit levels before entering any trade. Always analyze their volume and related news for a complete picture. Remember, it's crucial to let your winners run and cut your losers early. Now use their earnings reports to anticipate broader market moves. It's usually not wise to trade against these market leaders, especially cautious of breakouts during. Use tight stops when trading gaps and focus more on potential reversals rather than breakouts. Market always match volume with price action for a complete picture. Open and consider waiting for write-down every trade decision, including your emotions and reasons for entering. Set aside time each week to review your journal for patterns. Use these insights to adjust your strategy and avoid repeating mistakes. Remember, stops are there to protect you, not to signal failure. Pull back and track volume across these indexes and use them to spot potential sector rotation. Always place a stop-loss order and stick to it. No adjusting mid-trade. Consider using trailing stops to protect profits. Retest as always. Pair this with volume analysis for best results of the breakout level. ETFs can be a great way to trade the entire Dow basket. They can also give you valuable insights into sector trends. Always trade in the direction of the overall trend. Use the 50-day moving average to confirm trend direction. Look to buy on bounces above the moving average and sell on bounces below. Let's talk about breakouts, a favorite among traders, but also a common trap. To avoid getting faked out, only enter breakout trades with strong volume confirmation. Use RSI and MACD to back up your decision. It's often safer to wait for the candle to close before entering. Identify morning gaps and confirm if they align with the overall trend direction. Avoid trading bounces in low liquidity conditions as they can be unreliable. It's a great tool for trend confirmation, so keep an eye out for VWAP retests as potential entry points. Ride momentum by buying above VWAP when volume is strong and selling below when weakness appears. The moving average bounces can be incredibly profitable if you know how to trade them like a pro. Always confirm these moves with volume. Use RSI as additional support for your decision. One word of caution. Here's a sneaky strategy, using gap traps to outplay early traders. Look for volume to fade as a potential reversal signal. Now, let's talk about a tool hedge funds love, VWAP. Avoid choppy price action around VWAP. Institutional moves can make or break a trade, so learning to spot volume spikes is crucial. Look for sudden volume surges using tools like footprint charts or order book analysis. It's generally not wise to trade against these big volume spikes. Use volume to confirm trend direction. Here's an important tip: avoid news-driven market chaos. It's often best to stay on the sidelines near major news events. Keep an economic calendar handy and don't trust market rumors. Expect increased volatility around news releases. If you're unsure, it's better to sit out wild moves than risk your capital. One habit that can dramatically improve your trading: keeping a journal. Track your win or loss ratios religiously. For a broader market perspective, compare the Dow to the Nasdaq and S&P 500. Look for alignment between these indices as a sign of market strength. Use divergence as a caution signal. Always confirm trends across multiple indices. Here's a golden rule: never trade without a stop loss. A good rule of thumb is to risk only 1-2 of your account on any single trade. Want to trade like Wall Street pros? Master Fibonacci pullbacks. Draw your fib levels from swing highs to lows, focusing on the 38.2%, 50%, and 61.8% levels. Confirm these levels with volume or RSI. Set your stop beyond the next fib level and always wait for price confirmation before entering. Don't underestimate the power of psychological price levels. Round numbers like 30,000 or 35,000 on the Dow often act as significant support or resistance. Watch for big orders clustering near these levels. They can serve as excellent entry or exit zones. Trading earnings reports can be tricky, but here's how. To do it without getting burned: avoid full-size positions before earnings announcements. Check how the stock has historically reacted to earnings. Consider using options to hedge your position. Keep an eye on implied volatility, and remember, trade the reaction to the news, not the announcement itself. For a deeper understanding of the Dow, study its components. Familiarize yourself with all 30 Dow stocks. Watch the top movers daily and understand the weight each stock carries in the index. Pay special attention to heavyweights like Unitil or Apple. Finally, remember this golden rule: the trend is your friend. MACD can be great for timing your entries. Avoid trading in sideways markets. And when the trend is strong, let your profitable trades ride. That's it for this video. Don't forget to like and subscribe, and see you on the next one. Happy trading, everyone.